We're live.
Welcome, good morning, good afternoon, good evening to episode 36 of the famous Carsten Show. Unfortunately, today without Carsten, he sends his apologies. He couldn't make it in time to join the call today. So I have the pleasure to try to be Carsten to replace him tonight. With me are two guests. Let me start with a gentleman who is the first time with us here, Kory Hoang. Kory Hoang is the founder and CEO of Stably, a venture capital-backed startup. Marketing is okay here, Kory. A venture capital-backed startup that is on a mission to connect wealth from the real world to the blockchain economy and help bring stability to the volatile cryptocurrency market. We will speak in a little while what he means by connecting real world wealth with the blockchain. He is also a real banker and has worked in many different roles in the banking industry, from being a bank teller to research, and last episode before a private equity analyst, if I'm not mistaken. Welcome, Kory.
Yeah, thank you so much for having me on the show.
We are glad that you're here. And then in the blue corner, the one and only Lou Kerner, frequent guests of our, or frequent guests of our Carsten Show, already know him. He has been on the show, I think in the first 10 episodes, maybe quite a while back. Lou is, as one would call it, the eminence grise in the crypto world, also one of the earliest advisors to Vesto. And as I mentioned, he has been on the show a little earlier. He also has a banking background with Merrill Lynch and Goldman Sachs. He is a crypto VC at blockchain co-investors. I'm always have to be careful not to call it Coinvestors, but co-investors, but you might shed some light on this later on. He has built crypto communities, including Crypto Mondays, one of the largest crypto meetup groups in the world. Welcome, Lou.
Thanks a lot, Wolfgang. Thanks for having me back.
We're so glad that both of you are here. Let me start maybe with Kory. The little introduction that I made on Stably already included two trigger words for me that called my personal attention and likely also the attention of our audience. And that was number one, real world, and number two, stabilize. So connecting wealth from the real world to the blockchain. I mean, what do you mean by this? Is that real estate? Is that precious metals? Is it art collection or my personal collection of handmade guitars? Or are we talking about large scale industrial good or the harvest for the next season? I mean, and then how do you stabilize this? Could you maybe take an example and walk us through how this works?
Yeah, absolutely. Well, first of all, thanks so much again for having me on the show. It's a pleasure to be here. And for those who haven't heard of me before, my name is Kory. I'm the CEO and founder of Stably. We are a Seattle-based fintech that specializes in stablecoin as a service and asset tokenization as a service. So we work primarily with other financial institutions or blockchain foundations, fintech companies, both fintech and traditional finance firm, including precious metal dealers or even mortgage lenders, etc. And we provide asset tokenization infrastructure to these clients in order to help them issue their own brand of fiat-backed stablecoins, such as US dollar-backed coin or Canadian dollar-backed coins, crypto coins, or issuing tokens that are backed by other assets, as you mentioned before, precious metal like gold and silver, or even other types of assets like real estate or debt, fixed income, etc. Right now at Stably, we are not focusing on tokenizing anything beyond fiat currencies, commodities, and equities and fixed income at the moment. Obviously, tokenizing things like art and, rare cars, or I mean, even Rolex and jewelries and things. These are really, tangible assets that could very well be tokenized one day, but we see mainstream adoption and traction for these assets still, being a little bit further down the road. So that's why right now, as a business, it's more sensible for us to focus on the asset classes that have the most readily available supply that's easy to be tokenized, as well as immediate potential demand from the market. Because once you have tokenized an asset, it doesn't, necessarily unlock liquidity for the issuer or for the token issuer right away. You still need to be able to find, the other side, which is demand, right? And demand has to come over time as the crypto market continues to grow, and this blockchain technology continues to be adopted. So yeah, in essence, that's what Stably does as a company. And I'll be happy to go into more details on, the specific, whichever questions you have.
I mean, coming from an industry background myself, I'm obviously interested in, let's say, industrial equipment, in large container ships, or even if you say a large container ship is maybe a little bit too early. What about tokenizing capacity? And I mean, capacity is a product or a good that is traded literally traded, at least on a global market. And if there is not enough capacity in a factory, we see how the shortage in silicon, in chips, leads to, in microprocessors, leads to slowdown in car manufacturing worldwide. So isn't that something you could also tokenize?
Yeah, absolutely. Potentially, that is something that could be tokenized, although I'm not as familiar with the capacity market. That seems like something that, though you could tokenize it or digitize it into something that's tradable, does every person who ends up holding a fractional unit of this capacity, would they be able to directly benefit from consuming it, or is it only purely an instrument for speculation or investment?
Likely the latter, I would say.
Okay, so in that case, that could be there could be some trouble there, because things like capacity, they're supposed to be consumed. Right, these things that are traded, the entities that usually trade, buy or sell them, are actual, industries, companies, that factories or whatever, that are actually interested in utilizing that capacity for their business operations. And I'm just kind of speaking based on what I kind of understand of carbon credit and capacity is. I think it might be a little bit similar here. So if you were to tokenize it, yes, the end user could definitely speculate and invest and get exposure to it, but does that really actually get that product to the end user, the actual end user that needs to consume it, right? And if the answer is yes, then I think the tokenizing it and putting it onto the blockchain so that people can trade it on Uniswap or whatever is a very viable solution. You just got to figure out the tokenization framework around it, which is
okay.
Yeah, the most difficult part, right? For us, we use trust-based tokenization framework. So we work with regulated trustee to set up a trust, which will be managed for the benefit of the trust beneficiaries, who legally would be the token holders, right? So a token holder would become a legal beneficiary of the trust if they pass KYC, AML verification, of course. And then they would be entitled to receive a fractional, ownership or of the underlying collaterals held inside the trust. So for us, this works very well with things like fiat currencies and commodities and even things that have titles like real estate or even mortgages, right? A mortgage, we could assign a mortgage title into a trust and then have mortgage payments be paid into the trust by the servicing company over time. Right? So anything that you could assign title to a trust or put place into a trust and have a regulated trustee manage it for the benefit of the token holder, we could tokenize it in essence. Yeah.
Okay. Cool. Thanks. Maybe last question on this, or on top of this. not too long ago, we had Nitin Gore with us, who leads IBM's financial sciences research practice. And he mentioned a number of, I think, roughly 200 trillion US dollar worth of assets known globally today. And only a small fraction is already in the crypto space, is tokenized. Do you have an idea or prediction how fast this will grow? Where are we today, and where do you see us in the next 3-5 years? Or is it too early, too immature for our market?
Yeah, I think you know, it's all speculation at this point. You know, if we look at, you know, stomarket.com, which is basically the coin market cap for security token, right? You can see that all the index security tokens on that website add up to maybe probably like 1.2 billion, 1.3 billion dollar in total so far, which is super tiny, right? When you compare it to stablecoins, the stablecoin market as a whole right now is over 110, 120 billion dollar, right? And the cryptocurrency market as a whole is over $2 trillion. So and now you narrow down to just security tokens alone, which is, you know, most tokenized asset. If you do tokenize them, a lot of them is going to end up being classified as security tokens, right? That particular market alone it's not there yet, primarily due to a lot of regulatory and compliant, you know, restrictions and a lot of it really surrounds, you know, KYC, AML verifications and you know, whitelisting the holders of these security tokens, which, you know, as you may know, in decentralized finance, it's not really a thing. You know, people don't get KYC, AML, and DeFi. That's just not how how you DeFi, right? So so that's definitely has been a hindrance to tokenized asset adoption outside of just stable coins and commodities. Stable coins and commodities are okay, fortunately, because, you know, they're not securities. Because they're not securities, there's less you know, KYC or holder restriction on, like, you know, who can actually hold them, right? And who can send or receive these. And so stable coins and commodities have, you know, tokens are seeing like a proliferation. You know, we have $120 billion plus of stable coins right now, including gold-backed tokens, right? So I think that number is going to continue to grow. A potential catalyst that I'm speculating on right now for security token adoption in the future is, you know, one, onshore regulations regarding security tokens that become more favorable, which will enable more onshore institutional to you know, tokenize asset onshore. However, I'm not as hopeful for this scenario as much as the second scenario, which is eventually more and more decentralized protocol and exchanges is going to think about KYC, AML, and they might potentially, you know, it doesn't take the whole entire industry to do it. It just take a couple big players like Uniswap, who's under investigation by the SEC. Right. So imagine if Uniswap implemented KYC AML on the front end layer up there. You know, maybe not at the protocol level, but at least at the front end level, right? And imagine all the token issuers now becoming more compliant minded and implementing KYC. At that point, it will become much more viable for you know, compliant security tokens under, say, Reg S to become easily created and traded on Uniswap by a lot of people that are having KYC AML. So I think, you know, once that happened, that could potentially present a really large, big, huge catalyst for security token adoption and you know, boom. So, but we're obviously not there yet. So you know, that's why, you know, whatever security tokens that are listed on Uniswap right now that are restricted have very, very light volume, probably less than, you know, less than $20,000 of 24-hour volume.
Okay, cool. Thank you. Maybe switching over to Lou, and maybe fast forwarding a little bit, and give the market a little bit more time to mature in the items where Kory said, well, the securitized assets or asset-backed securities in the classic form, like the what was the US companies called Freddie Macs and Fannie Mae's and real estate. If this is the next big thing, this would change everything, doesn't it? Or am I stretching it too far when saying that we would then also, of course, be able to change, let's say, public land registries and insurance, and maybe even fast forward, and I'm still with my industrial equipment. That's maybe 5 or 10 years down the line. But why should a large container ship that hopefully is not blocking a channel anywhere and not be securitized and have fractional ownership by a general public, by everybody who is able to participate in the DeFi market? And if cost for freight goes up, well, then my token is more valuable. And if cost goes down, then of course I would have less of a value in my asset. Am I too far out, or is this something?
Yeah, I think look. Yeah, obviously, Wolfgang, you're preaching to the choir. So it's in my view, it's not a question of if, it's more a question of when. You know, there's a great law called Amari's law. He was a professor at Stanford in the 70s, and it's that the impact of all great new technology is overestimated in the short run and underestimated in the long run. And I'm assuming that's going to be crypto as well.
Okay. And what is I mean, you're also a VC. What do you see in the market? What are the trends? What are the hottest ideas where you say, this is great, but come back in 3 years' time? Or what is current? What comes next after Vesto? What's the next big thing?
Well, look, I mean, I think, you know, what's obviously going like this at the moment, is DeFi and stablecoins, right? I mean, there's a lot of speculation going on because people are seeing the potential future, that we have. You know, I just had one of the other companies I listed in called, Brain Trust, a super interesting company, the future of work, decentralized, and they just started trading on CoinList, at a $10 billion valuation. And, who knows, it could grow into a $1 trillion valuation, but, traditionally companies at that stage wouldn't have that kind of value. So, the world is changing, and the payoffs, the $1 trillion opportunities, are there, and with certainty, in my view, are going to happen. And so you can pay $10 billion for a bunch of companies, and build up that basket, to ensure that you get the $1 trillion winners that are coming down the pike.
Okay. I mean, when everybody speaks about DeFi, and when I learned DeFi, I'm still learning DeFi, but when I got first exposed to the concepts and the ideas of DeFi, of getting rid of intermediaries, I took the term quite literally, like decentralized finance. But in the example we made, we already hinted a little bit towards a decentralized, because public ledger-based land registry, or a decentralized insurance business, or a decentralized. So what would be next if DeFi at the moment is focusing on lending protocols and yield optimization? What is next in the DeFi space? Is it insurance? Is it product related credits like car loans? Is it what is next in there? What would you predict if you would be the Oracle of Omaha for crypto?
Sure. So, I can tell you opportunities, and I'm super interested, so stable coins are going like this. And so you go, okay, well, what's going to come next? I mean, I think you go, well, what's the biggest market out there? Biggest market out is derivatives, decentralized derivatives, right? Make your own derivatives. That's coming in a decentralized world with all these different Legos. Oh my God.
Okay. Kory, from your perspective, what are you collateralizing next? What are the earliest, the hottest requests where you say, we are not yet there, but the market is developing towards it? Decentralized?
Yeah, absolutely. I think, just the stablecoin market alone is not fully mature. It's only $120 billion. There's still a ton of opportunity. In fact, for Stably in the past 3 weeks, we managed to successfully turn our stablecoin, our USDS stablecoin around. Previously, we issued it only on Ethereum, and it was very difficult, frankly, for us to compete with USDC or Paxos or a lot of the bigger guys, simply because they had a lot more liquidity and they were much more readily available for everybody to access than we were. And so we start expanding to alternative blockchains that are smaller caps, right? That doesn't have stablecoin yet, but have a budding DeFi ecosystem that need direct fiat on off ramp or stablecoin integration.
Yeah, you can't have a big DeFi system without a stablecoin.
Exactly. And, to our benefit, Paxos and USDC and Circle and, all those guys, they don't have time to work with, everybody in the blockchain space. And in fact, I think, USDC is not planning to expand onto any new blockchains anytime soon, at least for like a year or two. So, but, that leaves, opportunity for players like us to partner with a lot of these blockchains.
And why do you think they're doing that?
I'm not sure. They're just really busy and, they have other priorities. I mean, if I was, USDC, I'd probably be working with a lot of major institutions and banks right now, right? A blockchain foundation.
Do you think there's greater regulatory risk if you work with multiple chains?
So we don't work with just, any blockchain really, right? So we do have to look a lot, dive a lot into, whether or not these blockchains are legitimate and how we can support it. But we work together with Prime Trust, our regulated partner, to provide administration for tokens on all these blockchains. We maintain KYC, AML, make sure there's regulatory access for in case regulator need it. And if anything's happened, where our team can be there to address these issues. So I think going onto multiple blockchains won't be an issue. I mean, USDC alone is already on like 5 or 6 different blockchains, right? So
what is the next blockchain you're supporting then? Is it Solana, or where are you moving towards?
So this year we expanded to Stellar, Tezos, Digital Bits, Icon, and man, I can't recall off the top of my head. We're definitely on Binance chain as well, and Icon pay off really well this year. It's a Korea focused blockchain for enterprises. And we not only did we bring our USDS stablecoin onto Icon, we also integrate with one of the non-custodial wallet on Icon to facilitate fiat on-ramp. And that drove our stablecoin volume significantly. We went from less than $500,000 in market cap to more than $7 million now in the past 3.5 weeks, basically.
Okay, cool.
So people on that blockchains are using stablecoins, our stablecoins, right? And USDC or other players haven't expanded there yet, and so we're capturing market share in that particular.
A question we always receive at Vesto when we talk to non-US territories is, what about having a Mexican peso based stablecoin, or a euro based stablecoin, or a Singapore dollar, whatever have you stablecoin? Is this something you're also planning to have on your roadmap?
So usually we only create tokens when we have demand from our client for it. So, client from Canada asked me to create a Canadian dollar stablecoin, done, easy. If somebody from Mexico asked me to create a Mexican peso stablecoin, I'd gladly do it. But so far, we haven't had that kind of demand coming in yet. Primarily, it's still surrounding US dollar because, the dollar is the number one.
That's why we are partnering, right? To introduce you also to these opportunities.
Right. But, we haven't had much outbound marketing effort neither. Most of our sales and business dev has primarily been inbound. So I'm sure that, there are companies and potential clients in other countries that are looking into tokenizing their local fiat currency. And I think it makes sense. I mean, I know for sure in Vietnam, we're working with a local company over there. They already created their own local stablecoin called VNDT. And VNDT is, it's ERC20. It's actually on several blockchains as well. And they have fiat on and off ramp into it in Vietnam. And we're working together with them to provide a remittance corridor between the United States and Vietnam right now using, stable coins and fiat on and off ramp. So So definitely use cases locally over time will increase, but USD is still dominant for the time being.
Okay, thank you.
Yeah.
As always, time flies when you're truly having fun. So we are already half through the hour. I have a last one for the two of you, actually. But I'll start with Lou this time. So Kory, you can think about the question. On his LinkedIn profile, Lou writes, "I've been focused on crypto 24/7 since seeing the crypto light on June 29, 2017. Lou, what is the moment of crypto light? What was it? What has happened, and why did it change your perspective?"
Sure. So, everybody has a crypto origin story. Mine, and I'll get through it quick. Started in 2013. Smart guys, said, "Hey, learn about Bitcoin. It's a thing." So, the first thing I do quite often when I want to learn about something is I'll hold a conference call with experts. It was the only call. I've done this more than 100 times. And this was the only time the Wall Street Journal live blogged the conference call. This is late 2013, and they started the conference call by saying we're on a conference call with Lou Kerner, Wall Street's Bitcoin expert. And so my first day in the industry, I was coined Wall Street's Bitcoin expert. And I actually ended up spending maybe 10 or 15% of my time for the next year trying to understand it, because really smart people was telling me that it was a thing, but I didn't see anything. So I kept on looking at it, and the whole time the price is going down. I made a couple small investments. One, was too early, and the other actually worked out quite well. It was a domain name, bitcoinwallet.com, that I bought and sold. And fast forward on June 29th, 2017, when ICOs were going like that, I didn't quite understand them. So I held another conference call to learn. And Olaf Carlson Weeb, a VC, was one of the speakers on that call. And he said something that was really inconsequential, but it was like a puzzle piece with a squiggle. So the squiggle's not important, but when you take that squiggle and put it in to the puzzle with all the other pieces you already have in place, now you can see what the puzzle is. And that's what it felt like to me. It felt like, one moment I thought the world was one thing, and the next moment it was something completely different. And I really was of the belief at that moment that, like, oh my God, this is, potentially the biggest thing to happen in the history of humanity.
Okay, thank you. Kory, what's your crypto light story?
Sure, but Lou, what did Olaf say? I'm really curious.
I don't even remember, quite honestly. It wasn't anything substantial. It was just like, I should go back. I'm sure it's on video on the internet. I can go back and watch it. But it was, and I was in a manic state for 3 months, just kind of writing furiously to learn.
Really cool. So Wolfgang, to answer your question, I think that moment for me was probably in late 2017, early 2018, actually right before I raised seed funding for Stably. In 2017, I've been trading crypto actually ever since 2013, but not selling all along the way and not hodling like what I should have done. So it wasn't until 2016 that I got back heavy into trading crypto, and did really well from 2016 to 2017. So that's why at the end of 2017, I left PitchBook, where I was working as a private equity data analyst. And I actually went back to Vietnam for a little trip before I raised funding for Stably. Funny enough, it was actually in Vietnam that I found funding for Stably. Out of nowhere, it was on a vacation trip, right? But while I was in Vietnam, I started to realize that people in Vietnam were starting to talking about crypto, about Bitcoin, and there were communities and there were people over there, and it seems like these people over there had a deeper understanding of this technology and how to utilize it for their own benefit than people in the United States. And remember, this was like 2017, 2018, right? So it was still a little bit earlier. People over there had to deal with things like capital control, banking restrictions and all that stuff. So, people over there were already buying and selling USDT, over the counter and to each other. And, there were people that was like, kids, like, 18, 19, 20-year-old that would, it would be like a Craigslist forum, right? They would be buying and selling USDT and Bitcoin, and it was a pretty lively market, right? And when I saw that, that was the switch for me, I guess. Like seeing my own people in my own country doing it. Vietnam is not like supposed to be high tech like the United States, right? But when I actually saw them did that over there, that was pretty much the switch for me. Yeah.
Cool. Thank you for these two moments. I can't compete with the two of you for my crypto moment, maybe to share my own. Actually, I don't think I ever had the true light switching crypto moment. I was a consultant pretty much all of my life, working in data-related topics in banking, digital payment. I led Accenture's IoT practice in the German-speaking markets, typically the industry guys. And the industry, of course, includes, in an IoT context, pay-per-use, micropayments, stuff that you do not want to do with a credit card, for instance, or preloaded, prepaid type of approach. And then in 2019, I decided to retire from Accenture. And coincidentally, about the same time, a guy called Travis McGregor rang me up and said, "Hey, man,
let's do this.
I have something to do for you. We want to have a crypto banking as a service solution with the stable US dollar on it." So, we started to talk and to talk and to talk. And slowly, I think we got into it. And together with Travis, with Chris, Jeff, and a few others in the team, we developed what is currently the strategy and the architecture of Vesto, our layered approach to provide the crypto transaction engine in the retail space. But there wasn't the light switching moment. I have to admit it didn't have. Anyhow, Travis, I think we are.
Well, we're about there, but I'd like to say one thing. Lou, thank you very much. And Kory, thank you very much. What I like the best is the $1 trillion opportunity, and that is real when you look at the numbers and the shift of everything. So it's a very exciting time. And again, thanks for everything. And Wolfgang, thanks for stepping in and being host today. And everyone in the audience,
Lou,
thanks for being
Kory.
here. Bye. Signing off now for Vesto. Take care, guys.
Yep. It's my pleasure. Bye, everyone.